Welcome to today's webinar. My name is Aneta Buchert and I'm a Senior Director at the Global Institute of Credit Professionals and the host of today's session. So the webinar today is split into roughly two equal parts, and the first part is an interview with our guest speakers, and the second part is a Q&A session. So in the second part, there'll be plenty of time for questions, so if you have any, please do submit them via the Q&A functionality. Before I introduce the speakers, let me say a few words about the institutions co-hosting the webinar, the Global Institute of Credit Professionals and CreditSights. So the Global Institute of Credit Professionals helps its members advance their careers and stay at the forefront of the credit industry. It does so through its network, events, thought leadership and learning resources, and through its flagship professional qualification, the Global Credit Certificate. You can find out more about the qualification and the complementary institute membership by visiting the institute website at the www.gicp.org. And our co-host CreditSights is a Fitch Solutions company which empowers the world's financial decision makers to better manage risk. It does so by leveraging its independent credit research, market insights, covenant analysis, news, and data. More than 170 research analysts, lawyers, and journalists power CreditSights, Covenant Review, and LeftFin Insights, and all three are now available in one platform. Again, if you'd like to learn more about CreditSights, you can visit their website, where you can also sign up for a free trial. So now let me welcome today's speakers, Jordan Schaufin and Andy Lee. Both Jordan and Andy cover the US technology sector at CreditSights. Jordan focuses his research efforts on software, internet, and hardware, and Andy specializes in semiconductors with additional tech coverage. So Andy and Jordan have co-authored a primer on generative AI, which is the topic that we will be discussing today. And the AI primer is available to the CreditSights clients and those who sign up to the complimentary GICP membership. Jordan, Andy, welcome. It's great to have you here with us.
Thanks for having us.
Thank you.
Appreciate it.
Jordan, let's start with a question to you. AI has been around for a long time. Why is there so much buzz around it now? What has changed?
Simple answer is ChatGPT. That was released, with the month left of 2022, and that really took the world by storm. And the interface is conversational. The content is created in just seconds, and importantly, it's contextually aware. So it's able to generate content that resembles something that a human would create. This was the fastest growing app of all time until Meta released Threads last week, eclipsing that growth. But the user adoption and the visceral reactions that we've seen to ChatGPT, has really caused nearly every tech company out there to go all in on generative AI in late 2022 and predominantly in 2023. And generative AI, for anyone that's less familiar with it, it's a subset of AI that focuses on the generation of new content for things like text, images, video, music, and more. So in addition to new interfaces like ChatGPT and others, there's been major breakthroughs in technology over the past few years that have enabled this technology. So things like neural network designs, specifically transformer models, usage of very large supercomputers, and just general advancements in hardware performance as well.
Brilliant, thank you. And Andy, what are some of the innovations in the semiconductors or hardware that have enabled this boom in generative AI?
So AI is very computationally intensive. So beyond just overall demand growth for hardware, compute infrastructure design has had to change. I'll touch on three major changes here. I would say the biggest innovation is the rise of parallel computing and the adoption of GPUs in that context. If you look at servers historically, they were essentially just more powerful versions of consumer PCs. But as AI and machine learning workloads became more prevalent, the industry couldn't get the level of performance they needed by simply moving to a more powerful central processor. So the solution was to break up workloads into many pieces and process them in parallel. Now, the CPU is really more suited for handling sequential tasks. So over time, GPUs and other accelerators have become the primary workhorses for AI. They're just much better at handling parallel tasks. Many of the largest AI models now are trained on supercomputers. They can contain tens of thousands of processors. They often have a heavy GPU mix. It's pretty common to see 4 GPUs for every 1 CPU in infrastructure that's specialized for AI. GPU sales were around 5% of data center compute back in 2016. That's grown to over 30% as of 2022. So we think this GPU share gain will continue. The second change is a rising importance of high-speed networking. You're now breaking up workloads, sending it out to many nodes, bringing it back together. So there's a more inherent shuttling around of data that's required for AI. Any bottleneck between those nodes can really impair overall performance. So chips that specialize in high throughput, low latency movement of data, that's now an indispensable part of compute infrastructure. And finally, AI demands denser connections and less physical separation between logic and memory, so much so that they're usually included on the same package as part of a sort of a mega chip. So the industry has been moving towards something called 3D packaging to accommodate this need for tighter integration. The result here is that packaging and test, which is sometimes called back-end chip manufacturing, used to be relatively unexciting and commoditized service. That's now a space where there's a lot of growth and innovation happening. So the leading edge foundries like TSMC and Samsung, they're certainly involved, but back-end specialists now like Amkor and ASE are seeing some tailwinds.
Brilliant, thank you. And Jordan, following on this one, what are your views at a high level on how will this impact the technology sector?
Thanks, Annetta. So, I mean, taking a step back, I mean, right now there's a lot of caution in enterprise IT spending. It's largely a function of macro uncertainty and an unwind of the COVID boost that we saw in prior years. So this is impacting growth rates for cloud, software, and hardware. Remains fairly weak at the moment. We think generative AI has the potential to change that. It's boosting productivity and also improving products and services at the same time. We think this will translate into a shift in spending from non-tech into technology. And as a result, we expect generative AI to be an accelerant for global IT spending across the entire tech stack of semis, hardware, software, and cloud. Right now, it's showing up more in certain areas than others. For instance, GPUs that Andy talked about. A lot of the focus today is on training and training these large language models and building out these supercomputers, but it's still fairly early days, and we expect some broadening of that benefit over time, and that focus to shift not just from training but more inference over time as well. And then finally, we view this as a foundational change in technology, similar to what we saw with the advent of cloud computing. So new winners and losers, and we're assessing both the size of the opportunities as well as the threats to existing franchises. So a lot of disruption going on.
Brilliant, thank you. So if you don't mind, let's look a little bit more detail at some of the tech subsectors. So Jordan, how will the boom in generative AI, how will it impact the public cloud companies? What's your view?
So public cloud is one of the areas that's seeing an immediate benefit. Nearly all or practically all of the generative AI workloads today are in the public cloud. A data point that we got was Microsoft commented that in the June quarter, AI services would be a 1-point tailwind to year-over-year growth. But they're still expecting a 4 to 5 point deceleration, right? So it's not enough to offset those broader macro trends that I talked about earlier. We think there could be upside, right, to that guidance, that one point tailwind, and we expect that to grow meaningfully in future quarters. So right now, public cloud is, seeing a significant benefit, and we expect that to continue for the, and really accelerate moving forward.
Brilliant. And what about the software companies? Are they seeing any benefits of the generative AI trends?
Absolutely. So software is an interesting part of it, right? Because this is where users interface with the technology and feel it. This is where a lot of the improvements to productivity and services are happening. And software companies, still kind of early days. There's some live products out there. They call them co-pilots, right? So AI, generative AI, which is integrated into existing apps, is generally referred to as the co-pilot version of those apps. And companies are charging like a pretty hefty premium for that functionality. GitHub Copilot is a really interesting kind of early mover there. GitHub is owned by Microsoft. That they're charging $10 or $19 for the business version, which is basically 2x the price of the normal GitHub subscription. And roughly half the code that's being written today is using generative AI. So this is a pretty big opportunity. The other one that Microsoft rolled out, it's a invitation only. Details weren't disclosed, but there's news reports out there saying they're charging enterprises $100,000 for Microsoft 365. So this is integrating generative AI into their Office 365 apps. It's up to 1,000 users, so it works out to roughly like $8 a month, and that's maybe a 35-40% premium to the existing apps. Other companies are not as far along, and they're still trying to figure out the pricing models. So some things are live, some things are in beta, but it's a very large ARPU opportunity for software. To a lesser extent, there could be a case to be made that you could grow the user base as well, right? Because what we're doing is, if you incorporate generative AI, you're lowering the barriers to entry for certain skills, whether it's coding or photo editing or other use cases we haven't thought of yet. But so there is a user growth opportunity, but it's, in our view, it's predominantly a pretty significant ARPU opportunity for software.
That's very helpful. Thank you, Jordan. Now let's switch gears and focus on the winners and losers. So, Andy, starting with semiconductors, which company stands to benefit most from generative AI?
So within semis, NVIDIA is the clear winner. NVIDIA pioneered the GPU. It maintains technology leadership there. So it's currently viewed as the gold standard for parallel compute. It also has a significant moat on the software side. CUDA is NVIDIA's proprietary platform. It provides a relatively streamlined way to run general compute functions on GPUs. This was introduced way back in 2007. So it's got over 3 million registered users now. Developers are very familiar with it. They have a preference for it. And that's certainly part of what makes NVIDIA's business quite sticky. Lastly, the company also has built out over the years a pretty strong portfolio of non-GPU products, especially in networking, which is also very important. So NVIDIA is really as close as you can get to a one-stop shop for quickly building out AI infrastructure. Their data center business was just 10% of their total revenue in 2016. That's now over 50%. So we expect to see strong growth continue there.
Brilliant. And semiconductors, obviously, key space. So are there any other winners in semiconductors, or you think these are the main names?
We also like Broadcom. This is a more diversified company, but it's got a presence in custom compute accelerators and also in networking. So on the custom side, Broadcom is most well known for being the co-designer for many of Google's AI chips. And it reportedly has similar engagements with other large cloud players like Microsoft and Meta. And then on the networking side, Broadcom is the leader in high-speed Ethernet chips. So that's important for data center infrastructure broadly, but even more so for AI workloads. Overall, AI-specific products are only about 15% of Broadcom's chip business today, but we think that's going to see very strong growth rates over the next couple of years. Another company that could be a winner as well is AMD, though we like NVIDIA and Broadcom a little bit more. AMD has historically been more of a data center laggard, especially on the GPU side, but it's made improvements to its portfolio. It's managed to get several big design wins in the supercomputer space. Overall, AMD's products do directly compete with NVIDIA, and that's a pretty challenging task in our view. But the total addressable market is clearly very strong. So we think AMD is likely going to gain some traction, especially with the large cloud customers who are probably interested in diversifying their supplier base.
Brilliant, thank you, Annie. And finishing up on the semiconductor topic, are there any companies which are not well positioned?
Yes, so we probably have to put Intel on the short list of losers here. Intel is primarily a CPU provider. Historically, it's been extremely dominant in compute, but it's experienced quite a bit of share loss over the past 5 years, given just a more competitive landscape and its own execution issues. This most recent ramp in AI investment is probably not going to help matters. As we discussed, one of the hallmarks of AI is the relative diminished importance of CPUs compared to GPUs and other accelerators. So while overall compute demand is clearly accelerating, Intel may struggle to participate as AI optimized hardware cannibalizes some spend on more traditional hardware.
Thank you. That's really insightful. So Jordan, now changing sectors and moving on to the cloud. Who are the winners and losers in the cloud space?
So in terms of the hyperscalers, Microsoft is clearly a benefit, and that's in the cloud and also, for on the application side as well. They've got first mover advantage here, in terms of their partnership with OpenAI. So OpenAI is the company, like the creator of ChatGPT, as well as DALL-E. So they have a significant investment in ownership in OpenAI, as well as an exclusive partnership. So they're the exclusive cloud provider for OpenAI's models. Microsoft started building supercomputers for OpenAI several years ago, which are used to train those models. So they're being hosted on Azure. They're getting both the training and the inference from that. And then also Azure provides a service where they're to enterprises where they can access those large language models via APIs and bring their own proprietary data and customize the parameters and do it in a secure and compliant way. So Microsoft is clearly very well positioned there. The other company I think that could pick up some share here is Oracle. Oracle has already been gaining market share in public cloud. They're significantly smaller than the other three, right? So they're just kind of breaking into that public cloud business, much smaller than AWS, Azure, and Google. So they've got the most upside. They also have modern architecture. Their Gen 2 cloud can dynamically create GPU clusters, so AI customers can get started relatively quickly. And they have a partnership with Cohere, which is an AI startup, a lot smaller than OpenAI and not exclusive, but they're doing some good things there. And on their most recent earnings call, they said that they signed up more than $2 billion of contracts from generative AI cloud customers, which is clearly, very, very meaningful.
Brilliant, thank you. So Jordan, I have 2 more questions to you, but in the meantime, let me remind everyone that if you have any questions to Jordan and Andy, please do submit them via the Q&A functionality. We will be moving to the Q&A session in a minute. So Jordan, 2 more questions from me. We've discussed briefly the software side of the software side. Can we look at who are the losers and winners there?
Sure. So a lot of disruption going on. I mentioned Microsoft, like the GitHub and the 365. I think the one thing I failed to mention earlier was Bing. They've got a much smaller market share than Google. Microsoft's advertising revenue is around $3 billion a quarter. compared to Google at 40 billion. So generative AI can disrupt a lot of searches, and that provides an opportunity for Bing to gain some share, and so that is very meaningful. Generative AI, Adobe is a really interesting one because clearly it's impacting Adobe's core franchises, but it's really impressive how fast they've moved here. They've got their own large language model, Firefly. They've got proprietary content in terms of Adobe stock. A key advantage with that proprietary data is they can create high quality images, and they're indemnifying users, right, of copyright, any copyright infringement. So Adobe really moving fast and integrating it into its existing apps like Photoshop. So generative fill, if you haven't seen that, it's really impressive the way that works. That's another feature or functionality that's gone viral. So we think Adobe essentially is going to capture that significant ARPU opportunity. And then other software companies, it's a little bit earlier days. Like Salesforce has some things in beta, some things live. They're moving to integrate generative AI across their apps. We think Benioff should be pretty good in terms of rallying the troops and kind of getting everyone on the same page. And he clearly understands the importance of this technology. And they've got some assets where like Slack, for example. So chatting in a conversational way, that's a natural place to do it. And then other companies, it's further along, but we've seen companies get disrupted, like Chegg, for example, right? Lost half its value in a day. Just as they provide homework help essentially, and for a paid subscription, and customers were using ChatGPT for free as an alternative. So there's a lot of disruption going on, and there will be winners and losers. In terms of like the large IG credits, I think a lot of them are relatively okay positioned, but I think some of the smaller names that aren't moving quickly here are going to see disruption.
Brilliant, thank you. And the last question from me, as I see there's quite a number of questions coming from the audience already. So Jordan, are there any of the hardware OEMs benefiting from this trend?
Not as much, right? So most of generative AI, or nearly all of it today, is in the public cloud, like we talked about before. HPE probably better positioned than Dell. So they acquired Cray back in 2019, which is the largest supercomputing business, right? So they provide some of the biggest supercomputers in the world for customers like the Department of Energy. Supercomputers is what's required, right, to build these large and train these large language models. So they have a little bit of an edge there in terms of supercomputers and high performance compute. And then they've got a pretty good business in terms of GreenLake, which is, so if they could combine those two and offer supercomputers as a service, they could start to kind of compete a little bit with the public cloud providers on that front. They can't feature match, right? But they could they could provide that capacity available to rent for customers. And so I think HPE is probably a little bit better position than Dell here, and there's an interesting opportunity for them. Whether or not they could execute on it kind of sort of remains to be seen. But Antonio Neri is doing a pretty nice job over there at HPE.
Brilliant, thank you, Jordan, Andy. Thank you so much. That's really insightful. Now we're just beyond halftime, so it's a perfect moment to move to the questions from the audience. So again, if you have any questions, please do submit them. We will move on to answer them now. And as a reminder, you can also find out more about Andy's and Jordan's recommendations and views in the two-part AI primer that they have co-authored. This primer is available both to the credit sites clients and also to those who sign up to the complimentary GICP membership. So we have the first question coming from the audience. And the question is, could you talk about how the big four ad agencies might stand to lose or maybe win from generative AI? I would think their margins would come under pressure. So that's not necessarily a tech question, but it's a very interesting one as well. So Andy or Jordan, would you like to pick that
one? I could try and address that. And I don't cover the ad agencies, but talk a little bit more broadly about the ad market and how that might play out. So and we'll talk about kind of the creative side and then just the advertising in general. On the creative side, right? So I think one of the interesting things that generative AI can do is create ads, right? So it's the creation of new content. That's something that Meta and others are working on. So that's really interesting. That's one of those areas where spending should shift to tech, right? From other areas. You could actually, so it might help, but it also might hurt, right? You don't necessarily need as many creative professionals to create those ads, but you're going to need to spend a little bit more money on those AI tools. The other interesting thing I think is how like the advertising might shift. So in areas like search, maybe there's less ads that get surfaced, right? So there's going to be just, if you have a search with buying intent, you're probably looking for links, right? But a lot of sort of general purpose searches, instead of serving up links to websites that have advertisements, you're just going to get a very useful answer, right, to your question that's not going to do much for the advertising business. So I think there's certainly a lot of disruption there, and there's maybe some pros and cons, and maybe some shifts as to where we see some of those advertising dollars being spent.
Brilliant, thank you. So we have another question coming from Miles, and the question is, what type of software businesses do you guys think will face the most replacement risk?
Good question. I think it's early days. I think anything related to creation of content is certainly something that's at risk. Things that could be automated are at risk. But it's also, this is a time where companies need to have demonstrated efforts to really incorporate AI. So if they're not like pretty far along in that process, if they're not cannibalizing themselves, then someone else is going to cannibalize them. I think we'll probably see that a little bit more in the high yield space. Companies that are a little bit more niche, they don't necessarily have the balance sheets to invest strongly in these new services. So we're going to see a lot of disruption. Chegg was a good example, but a little bit sort of hard to call out which one's going forward.
It is quite early to say, isn't it? So the next question comes from Rui, and the question is, are there any winners for on-premise data players such as Dell?
So we addressed this a little bit towards the end of the Q&A. I think that over time maybe it goes more on-prem, right? So it's all in the cloud just because it's so early days. And enterprises are like customers of generative AI are just kind of like dipping their toes in the water. As they become more sophisticated on generative AI and generative AI gets democratized and adopted more broadly, and inference becomes bigger piece of it, we think that some of the business will move to on-prem. And so they will capture some of that opportunity. But like I mentioned before, I think HPE is a little bit better positioned for generative AI specifically, but they're not going to be major beneficiaries here.
And another question, will IBM benefit from supercomputers and hybrid cloud?
I can take that one. IBM historically a laggard in the cloud space. Their acquisition of Red Hat kind of addressed that to a certain extent. Now they have a solid hybrid cloud platform. I would say the issue with IBM is that they are not as focused of a company as some of the other players in the cloud space. So I think, just as they were a laggard in the public cloud, I think they will probably continue to lag in the in the AI era as well. Like I think Oracle's doing a better job there, and of course the public cloud players already have a significant first mover advantage there.
Thank you. So another question comes from Robert, and the question is, will there be much global agreement on AI ML regulations, or could they materially differ by country?
I'm sure they're going to materially differ, just like everything else. The EU is at least trying to get that region on board, right? They've got the AI Act. I think what's interesting there, so the way the AI Act works, and I mean, they're trying to get this passed and get all the countries on board by the end of the year. But the way that it works is they are classifying different types of AI into different risk buckets, and they're regulating those, commensurate with that risk. And interestingly, generative AI is further down the spectrum, closer to sort of lower risk. So most of the requirements from the AI Act involve transparency, right? So like, hey, saying this was created, by an AI model. B, serving up the relevant, like, copyright, what data it's sourced from, and C, making sure that there's no illegal content. But that's much less stringent than some of the other higher risk buckets. In the US, they made very little progress. There's a proposed bill to remove the Section 230 for generative AI. So Section 230 is what indemnifies social media companies, right, from liability, what's on their platform. So if the bill is passed as intended, it would be a carve out and basically make them responsible. That would be, a pretty large issue, right? If there's liability there, but very early days, and that's a Section 230 it's always been a sort of divisive topic, and so chances are, that might not go anywhere. I think in terms of regulation, I see another question here on regulation. I'll just take that now about what are the implications, and I think it's the cat's out of the bag. Generative AI it's important for competitiveness, right? Of innovation, and I don't think you could put it back in. I think the cat's out of the bag, and so there's going to be regulation for sure, but it's also a technology. Countries don't want to get left behind.
That's very helpful. As next regulator, I can say you probably expect and these will differ, and companies indeed countries will indeed want to capitalize on this as much as they can. So the next question comes from Miles, and that is, what will be the infrastructure needed in order to commercialize generative AI at scale, and what do you think the timeline is for this to happen?
I can take a crack at that one. I mean, I think right now we are seeing kind of the first wave of investments. A lot of it is being made by the cloud players to just catch up in terms of technology, to make sure that they're not left behind. I think this initial wave is going to last and it'll be quite strong. It'll last for, let's say, 12 to 18 months. I think then you're going to see some level of kind of digestion, and there's going to be more thought on the economic side of things. Part of the infrastructure that's being put in place right now is going to be cannibalizing existing infrastructure that's not as well suited for AI. I mean, I think net, will this increase compute infrastructure spend? Probably, but I also think that training costs have to come down. They are coming down. I think in the future, I don't think you'll see model sizes just increase, exponentially for, as far as the eye can see, right? People are doing kind of state-of-the-art modeling now to kind of push the boundaries and see what can be done. But I think when a little bit further down the line, when people start thinking about commercialization, they're going to be looking at smaller models that are maybe trained on more specific data sets to fit a specific use case. So I think that should have a tempering effect on, how much infrastructure you actually need.
Brilliant. Thank you, Andy. So we haven't covered a couple of sectors and we have questions about those. So the first one's from Akshita, and it's what implications will it have on video games players like Keyword Inc.?
That's a tough one. So video games is one of those creative fields, right? We could see a proliferation of new games, or it just really lowers the barriers to entry to create a video game. You can imagine creating a game with a text prompt, for example, using generative AI. So I think probably we'll see a proliferation of games, as well as the maybe interesting platforms to create new games. So I think that would be just a lot more games and a lot more content. It's an interesting stat. I mean, I think it applies broadly, but Adobe's customers expect a 5-fold increase in content generation over the next few years, which we believe will happen given generative AI. And I think you could apply that broadly across all types of content.
Brilliant, thank you. And another sector we haven't covered is web service providers. So how will the business of web service providers like GoDaddy, Newfold, Endurance fare? And that's a question from Manjul.
That's an interesting one. I don't cover GoDaddy. I cover VeriSign, which is somewhat related. So GoDaddy is generally a reseller of domains and provides other value-add services like hosting and whatnot. I'd have to give that a little bit of thought and maybe come back to that.
Thank you. We can come back after the webinar. Definitely, we can do that. So another question from Karen is, what impact might generative AI have on IT consulting firms such as Accenture, for instance?
I think, and I cover Rackspace, which is distressed and competes with Accenture, and this is one of those fields that it doesn't diminish or necessarily increase their business, but it will create kind of a little bit of a shakeout and disruption in terms of winners and losers. So this is a new emerging technology field. So the consulting firms that are adopting it and integrating it into their offerings and advising enterprises, because enterprises are really just trying to figure it out at the moment. So the consulting firms that are at the forefront of figuring this out are going to sort of forge ahead, and other ones are going to get left behind. So I think it is it's disruptive for consulting services, but I'm not sure how much actual, I don't know if it's going to be an accelerant. We think global IT spending will accelerate in general, from this, and so they'll probably get a piece of that. But I think the bigger impact is sort of creating new winners and losers.
Brilliant, thank you. And we have a couple more questions. So how does reach valuation of these semiconductor companies standing up against the rising interest rate environment? Can you describe what assumptions are the most defendable for the industry? And that's a question from Grant.
Yeah, that's a great question. I mean, I think semiconductor companies broadly are getting a boost from this. Although there's certainly companies like NVIDIA, for instance, where the multiples are extremely high. I would say that's mostly narrative driven, right? Like I think the story there is that you're going to get a boost in overall growth and chip demand, but also that NVIDIA is going to cannibalize a significant portion of sales that would otherwise go to Intel, potentially AMD. So it's like there's a massive share gain assumption built into that as well. I'm not sure if that's necessarily the case. Like I think the base case might be a bit too aggressive there. I think over time the market could it becomes less of a I'll put it this way, the pricing tailwind kind of goes away, right? Because training costs come down, people figure out how to do these things, how to do these computations more efficiently. So I think in the near term, the huge guidance boost that NVIDIA provided last quarter is boosting revenue expectations in the near term. But if we look 5 years out, 10 years out, I think you'd have to assume more modest expectations.
One more question: is AI expected to have a broad effect on credit ratings in the near term, 12 to 24 months?
Maybe we both take this one. So public cloud, no, the scale and the balance sheets are so strong that I think there's no near-term impact. And then on the software side, I think it's still really early days. There are, some possible movements on the high yield side, like Twilio, for example, if they could, figure out a way to leverage AI, and they've got some interesting assets there, that could maybe, help improve ratings. And but I think on the software side, it might take slightly longer than 12 to 24 months to actually move credit ratings. It's probably going to take at least 12 months to start moving revenue. So I think it's just so probably not much of an impact on public cloud, and probably takes it's some impact on software, but maybe takes longer than 12, 24 months. And then I think there's not going to be much benefit. Really, we're not going to see any movement at all for the hardware OEMs. And then one of the other, like the areas that we haven't really talked about today is like the hard disk drive manufacturers and the solid state drive vendors, so like Western Digital and Seagate. I think they see very little benefit over the next 12, 24 months. So I would not be expecting any help at all from generative AI on those companies in the next 12 to 24 months. And then Andy, did you want to maybe talk about that for semis as well?
Broadly agree. Like I think semis is going to see some modest positive impact for a handful of names, and that would be kind of the compute names, right? So mostly NVIDIA, potentially AMD. I think if you look at semis broadly, I don't think that you'll see the I do think that we're at a kind of cyclical upwards inflection in semis or close to it. And AI, this kind of initial ramp of AI has a lot to do with kind of helping that along. But I think broadly, if you look out kind of through the cycle, which is what ratings agencies tend to do, I don't see kind of a structurally significantly higher semiconductor growth or lower cyclicality. So I think any benefit is going to be pretty modest.
Brilliant, thank you so much. So we're literally at time. So we have a couple of questions. We will revert to them offline. We are at the end of the session, so we have to wrap it up. Andy, Jordan, thank you so much. It's been incredibly insightful. Thank you very much for your insights. As a reminder to everybody joining, if you want to find out more about CreditSights or indeed speak to the analysts, you can do that if you're a client of CreditSights. And if you want to find out more about the GICP, you can visit our website and learn about the membership and the certificate. And again, for those who sign up to the GICP and those who are CreditSights clients, we have the primer that has been authored by Jordan and Andy. So again, thank you so much for your time, and we hope to see you at future events. Have a great day. Thank you.